Hey traders, checking in on the stock market today. We started extremely strong today with all major sectors at the highs, bulls in complete control. We rejected from our downtrending resistance line. We had a little bit of weakness, and then we have the news that the COVID variant is here in the US. We knew that headline was coming, and here it is. So now let's see how much fear we're getting in response to that and what levels we're looking at from here. So here is our falling wedge, and we have fallen through the falling wedge. So this wedge, I must have talked about it 100 times today as far as a key resistance level. So we'll look at how that came into play today as far as taking trades aware of that resistance level. And then, I don't think the drop is completely due to the COVID variant here, but whenever there is a reason for fear, it always can help magnify things, because when you don't have a reason and it's just a technical drop, people are much more willing to buy the dip. But if you have something you can point to and they have big red letters across the screen, that's when things can get a little bit more extreme. So definitely helping the bear case to the downside. But again, we knew that headline was coming. So the market knows that headline is coming to a certain degree. And I don't think that that's going to be, a major reason for the weakness from here as far as the market's aware of it. So that means it's mostly priced in to a certain degree. That doesn't mean we're going to bounce soon, but that means that there's going to be other reasons that pop up. So looking at SPY on the daily time frame, it's also very notable to me that this falling wedge broke bearish. And that's because I've been doing a lot of longer term falling wedges on the S&P 500 over the last couple of years, and I can't remember one of them breaking bear. They've always been really good indications of when consolidation shifts into continuation. And again, this is the best example that went really well the last time around, but this is notable. One thing to also note, and again, a point that I made on the live stream, it's just you can't trade in the same way in differing market environments. You have to adjust your trading style with the adjusting market environment. So just looking at the S&P 500, the last 2 months, you can't trade the same as the last 2 weeks, or you're just going to give back profit. So it's important to recognize the shifting market environment. And by adjusting to it, it means a number of things. Number one, you can shift the directional lean that you have. Number two, you can use smaller position sizes until you're more comfortable with the market environment that suits your trading style. Or number three, you just trade less. So those are three things that you can do to adjust for the changing market environment. And we are definitely in a consolidation period, and we're not extreme. I'm not looking to buy dips here in any aggressive manner because of RSI levels. And I need historical, real beat up RSI levels if I'm going to be entering into weakness. But because of these bounces on the way down within this falling wedge, the 4-hour RSI is not oversold right now. We're just getting to oversold. The hourly RSI only got oversold in the last 30, 60 minutes of the day. So we weren't that beat up. And if I'm going to be entering into weakness, I need the daily RSI getting to oversold. I need the 4-hour RSI down into extremes in the teens. That's when I start scaling in for a bounce in the face of fear. Otherwise, I'm playing bearish hourly lower highs in a downtrend, and I'm patiently waiting for bulls to give me some kind of proof that they are showing up. One thing that's important to look at, another point before we get into the technical levels here, is you have to change trends. So IWM, notable bounce yesterday. XBI, notable bounce yesterday. From the end of the day, okay, we're standing out stronger than the broader market. First time in a while. Higher open, gap up open. All right, that's really strong. But we can't get too bullish because we've never changed the hourly trend. We know if that bounce is going to see any follow through, we must set an hourly higher low and higher high to prove that that bounce has follow through. We must set a support level and see continuation. So both IWM and XBI failed to do so. A bounce is nice, but a bounce means nothing without trend changes. And XBI is the same thing. Hourly bounce from the low to the high of today gave the entire move back because we never changed the trend. So when you see that happen, it can be two things. Number one, to be a bit more patient and cautious as a bull because it hasn't been proven, and to wait for the hourly consolidation. And number two, you can be an aggressive bear, and if this goes in both directions, but I'm giving bounce examples. You can be an aggressive bear saying, oh, gap up open, we haven't changed the hourly trend yet. I know we have to change the hourly trend if this bounce is going to get followed through. And SPY had an example of it today. Look at this bounce on SPY. Very significant bounce straight off the low of the day. Higher low every 1 minute candle. This is at 2:18 p.m. We hit the low of the day. higher low every single 1 minute candle, and 3, 6, 9, 12, 15 candles in a row, stair step pattern. So we just bounced in 15 minutes over 0.5% in the entire market, and we never changed any trend on any time frame. We never changed the 1 minute trend, the 2 minute trend, the 5 minute trend. So what's the result of that? We gave the entire move back. We never changed the 5 minute trend. We saw a significant bounce and then just slowly faded back to the lows. And you can find examples in the cannabis space. You know, ACB has had short squeezes a lot on the way down. Look at this move. Massive move off the low. We never changed the daily trend. We double top. We give the entire move back. So again, you have to recognize by zooming in, did we change trends to get to this level where we're at right now? Are bulls proving it? Are we establishing supports on the way up? Or is it just a straight bounce with no support established that has the potential to fade and give the entire move back? Bitcoin does it all the time. Rocket up on an hourly candle, never change any trends, and then just slowly consolidate one time frame at a time, giving it back. Recognize that because it's helpful information. So SPY, what are we looking at from here? Daily, again, I'm waiting for daily RSI. If I'm going to be looking to go aggressive, I need it to hit oversold conditions. We can see the last weekly consolidation, the monthly consolidation that we just came from. The daily RSI got right down to touch 30 at the low of this candle here. So where we stand right now, we're currently at 37. Again, not overly fearful. And that's, you know, charts can show us human emotion. They can show us euphoria and greed. They can show us fear. And I can see, you know, because of the volume in the big red candles, yeah, there's some fear there, but it's not extreme if the RSI levels are not extreme. So as far as support from here, 450.29. There's a gap to fill at 447.55. There's a lot of gaps down here. So we're keeping an eye on these gaps. And the more we pull back from here, again, now we zoom out. Because again, it's a different picture on every time frame. And we could say, wow, the bears have complete control on the hourly. And then you go to the weekly and say, well, I mean, we're easily in an uptrend at this point, and we would need to drop 5% more before we lose the weekly higher low that was established during the last consolidation. So what we're watching for on this pullback is retracement size, because even if we don't break 426.36 on this drop, we then will have to be cautious of a head and shoulders. So depending on how much pullback we see before a weekly bounce gets going, determines how much space is being created for a weekly lower high to be the result of the next bounce. QQQ is even stronger. So daily head and shoulders confirmed. Definitely a win for the bears today, no doubt about that. So lower high, lower low, head and shoulders confirmed. 387.53 broke as well. But look at the weekly chart. This is potentially a weekly bull flag. I don't think it's going to be a weekly bull flag, but technically speaking, it would still be possible. So again, there's tons of space. If we're going to see broader market fear be the real deal, I need to see big tech weakness. You've heard me say a million times that the Apple stock is the most important stock in the market. Amazon, Google, Microsoft, they're all up there with it. And those names must lose daily uptrends if we're going to see real fear. And that would mean QQQ needs to see a lot further downside. And again, same thing. We'll be watching for a head and shoulders if this pullback becomes significant. But I need another 3% plus to the downside at a minimum if we're going to be looking at the potential of a big enough drop to then be scouting a weekly lower high. And again, we had that big drop last time. V-shape, of course. But 8% drop into a V-shape recovery. What's the pullback right now? So 5%. So not comparable yet. But we can be looking at clues. Okay, how did we consolidate last time? What did the RSI levels reach on the pullback? Are we seeing more extreme drops this time? Is there more bear volume? Are we pulling back more significantly? That's all information that we can look at to say, is this similar to last time? Or is this different? Is this something more concerning? SPY pulled back 6% last time around, and here we are at 5%. So we're approaching it, and I can see it's a bit faster. So 6% over the span of 5 or 6 weeks. And here we are at 5% in 2 weeks. So that shows me that it's a more rapid drop at this point in time. Apple is still extremely strong. New all-time high today. Tons of space for a daily higher low. Again, you want to talk fear in this market, we have to lose the daily uptrend. So anything above 156.36 is a higher low. Bulls have plenty of space to maintain that uptrend. And it will have to see a higher low set, more likely than not, fail the all-time high, confirm a daily downtrend, Apple needs weakness if the broader market is going to be in fear mode. Semiconductors, unable to break the all-time high. If we're going to confirm the head and shoulders, we have to break 297.89 support. Holding on better than QQQ. One of our strongest sectors, but not immune to broader market weakness and close to entering further weekly consolidation. But again, same thing. Look at how much space we have over the last weekly high or low. We can drop another 5% easy and still not be concerned about losing the weekly uptrend. So I am on weekly time frames on 5% to even get to the EMA 12. So again, when you're talking buying dips, there are going to be people that are looking to buy dips in stocks that are in monthly, weekly, daily, hourly downtrends during this fear. At that same point in time, there will be stocks that are in monthly and weekly uptrends. And I personally would much rather buy something that's looking for a weekly high or low than something that's trying to change trends on every single time frame with the bears in complete control on every single time frame. So just keep that in mind. Yes, the weak names will bounce as well when the broader market finally does get some kind of meaningful bounce. But I personally, playing a bounce on a name that's in a weekly uptrend like this is just much more forgiving than trying to play something that's in a downtrend on every time frame. So again, be selective with the names that you are looking for potential bullish entries on. But I'm in patient mode. And it's also the fact that, after a really good year as a trader here in December, the last thing I'm going to do is get aggressive and try and be a hero just to give back gains on a really good year. I could go flat in December and I'm very pleased. So for me mentally, that's where I'm standing as far as being real picky and conservative in this current more volatile market environment. Tesla, EV names setting the daily lower highs, tightening up nicely. So high, low, lower high, higher low, lower high is now set. And it's all about daily support of 1062. And peers are doing it as well. LCID lower high set. Key support is down at 49.41. Are we about to lose daily uptrends in our stronger sectors into weekly consolidation? That's the next thing that we're looking at. And they're certainly due for weekly consolidation. LCID here has gone 100% plus since the last weekly pullback. So perhaps, bears are looking for these names to act as laggards on this drop. So that's something that a bear can look to tomorrow. If we lose daily high or low supports, maybe we see the EV names start to see a bit more weakness. So that's something that bears are looking at as far as a laggard reaction. Healthcare, financial sector, bearish engulfing. So we're now looking at weekly support much closer in play here, 3603, currently about 4.5% above that level, increasing weekly bear volume. How does the monthly look? Still in an uptrend. Daily RSI is just getting oversold. We bounced there in the past. So historically, since the COVID lows, there's not a ton of examples, but we have bounced around this range. So it would be notable to us. What would be notable? If we bounce, set a daily lower high, and drop to a lower low. That would be notable to me as far as bears proving follow through. So daily downtrend, hourly downtrends are our short-term guides. XLF is a lead bear still. IWM is a lead bear still. Bearish engulfing, very weak close, daily oversold RSI. And again, red flags all over the place as far as a new all-time high straight into this size of a pullback. Weekly supports being lost. Monthly EMA 12, but the support is 209.05 because if that level is lost, that's the lowest price we've seen in many months, 7 months, 8 months. That's our lowest price. So if that were to break, it would definitely be a big time red flag. And daily RSI down in the low 20s. This is the lowest RSI since the COVID dump, and we're not far from COVID dump levels. So we'll be extreme with another red day tomorrow. We'll be heading down to these COVID RSI lows, which will definitely get our attention. We can see historically pre-COVID, we're dropping down to 18 and 16. So the teens have a historical bounce zone, and we would need another red day. We're at 23 right now. Just something to keep an eye on. And again, it doesn't mean I'm just scaling in and not using a stop loss. That is a recipe for disaster. Because again, if the market environment shifts, what if we enter a weekly downtrend over the next 3 months? That would crush us. We have to have stop levels. So I can look at that and say, after a red day tomorrow, if we get it, okay, historical bounce levels, I have to find a bottom fish level that I'm playing off of. Even if it's a 5-minute trend change to the bulls, and then I make a swing entry off that low, that's my stop level. Have to use those stop levels because, again, we have to protect against the 1 in 10, 1 in 20, 1 in 50 times where something happens that we are not expecting at all. And that certainly, I mean, you don't have to look back far. 2 years ago, there were a bunch of people that probably got absolutely wiped out because we saw something that we have not seen in a very long time as far as the magnitude of that bear's strength. XBI gave it all back. And again, this is the weakest sector just in the sense that we're at our multi-year or 2021 low. Looking down, next level is 110.07. We are in a monthly, weekly, daily downtrend. Monthly, weekly, daily, hourly. Every single time frame possible is in a downtrend right now. And most names are just looking for an hourly lower high to be the result of the next bounce. So if the broader market opens higher tomorrow, bears are just scouting hourly lower highs. If the broader market gaps down, we'll scout some short-term bounces, and then bears will be scouting hourly lower highs. So bears know that there's an hourly lower high entry awaiting at some point. It's just a question of how is it going to form from here. So hourly downtrend is the most important factor for us in the short term. So spy how this played out. Again, bulls in complete control all morning, really strong day. And we were looking at all sectors up 1, 1.5, 2, 2.2%. And then we just completely shifted. So for me, just want to highlight what was going on with my mindset again, because the key for me was the 4-hour falling wedge resistance. And we were a good bit above it at that point, but I knew that I was watching, how is this candle going to close? Because it is still possible that we reject and close under this resistance line. And again, that resistance line that I was watching was here. So at one point in time, we were a good bit above that level. And in terms of how far above that level, well, I'll tell you. Don't embarrass me. Almost 0.5%, 0.4%. So as that is happening and as the bulls are in full control, still was looking for the potential that bears could take over. So this string of conversation is going to be occurring after this 5-minute pullback. So from the high of the day, we say, okay, that's a pretty sizable 5-minute pullback. That's big enough for us to scout a 5-minute lower high to be the result of the next bounce. So it's not just the 5-minute time frame, it's knowing the bigger picture time frame. Again, we're looking for confluence of signals, multiple signals on multiple time frames aligning to give us higher probability setups. A trade review that I did on MARA earlier this week was because we had a double bottom at the low of the previous day. It wasn't just a 5-minute trend change setting up. It was a 5-minute trend change based off of a daily support level. That's a confluence of multiple signals. So for S&P 500, for me, it was aggressive bears are scouting a 5-minute lower high, top fishing plays on names that have consolidated significantly the last 30 minutes. SPY bears must confirm a 5-minute downtrend for the 4-hour falling wedge resistance to remain in play. So if that 4-hour falling wedge resistance is going to remain in play, we have to set a 5-minute lower high where bears are looking to top fish. And then we have to confirm that 5-minute downtrend. And as soon as that happens, that's a rejection from 4-hour resistance for me. If SPY bears can confirm a 5-minute downtrend from here, it will be a rejection from 4-hour downtrend resistance, and we will scout an hourly higher low. Obviously, that hourly higher low did not happen. I will exit. At that point, I said I will exit my SPXS hedge if the high of today breaks on SPY, because at that point, if we confirm a 5-minute downtrend and then recover back to the high of the day, okay, we're breaking the falling wedge bullish, and I got to give up on my short position. So fortunately, that did not happen, but as soon as the 5-minute downtrend is confirmed, that's my stop loss for SPXS. I'm having a hard time being bullish at downtrend resistance. So I did go a little bit aggressive bearish on these downtrends. Didn't hold as long as I would have liked. Still in my swing SPXS position because bulls are not proving anything to me. They almost did today, but they're not proving anything to get me to cover. So I'm going to keep holding that position, and I'm going to play hourly lower highs unless RSI levels get to historical extremes. Then I'll start focusing on bounces. But until then, I'm playing hourly lower highs in hourly downtrends and playing with where momentum is currently heading. So we'll see what tomorrow brings, but regardless of what tomorrow brings, we're scouting an hourly lower high to be the result of the next bounce. All right. Feel free to ask any questions. Hope you had a good day. Remain protective out there. And again, another point, someone in the chat room made, and I completely agree with, a whole bunch of traders are new to this market since COVID, and they don't know what a downtrend is. They don't know what a weekly downtrend is. They don't know what a monthly downtrend is. So this market is ripe to punish people. Not saying this is going to be the top where we enter a prolonged bear market. I'm certainly not the kind of trader that tries to predict things like that. I take it one day at a time and get new information every single trading day. But I look at this chart and say we have not had a weekly downtrend in almost 2 years. And a lot of people have never experienced a weekly downtrend in trading. And it's going to get painful for them at some point. Don't know if this is that point in time, but at some point that will happen. So be protective. The more euphoria we feel, the more we know that when the music stops and the longer term market shifts, it will be drastic. So the weekly uptrends are my longer term guide. Hourly downtrend, short term trading guide. Weekly uptrends, longer term trading guide. If we set weekly higher lows within the next week or two, bulls keep their control. Do good things.